Hello everybody, welcome to Stock Market Jimmy. Today's session is going to be about Uber. Uber has a lot of things going on right now. They had a lot of big changes going with their entire structure of their business. So I'm going to bring you up to date on that, and we're going to analyze to see if we believe that Uber is a good investment. Before this video, you guys got to see a little screenshot and me talk about my Discord that I put together. Now, guys, it's very powerful for you guys. I took a lot of time and effort putting that together, and it's going to really benefit a lot of you guys. And I want to grow a big private stock group, and it's going to have a lot of good information in it, okay? All right, so let's get started on Uber. So basically, there's going to be a lot of good information here that you're going to hear, and we're going to evaluate at the end of the video if we believe that Uber is a good investment or not, okay? All right, I got to go with my old man glasses, and I'm recording this video on Sunday night. I'll try to release it tonight for you guys if it's not too late. For those of you, some of you guys might not see it until Monday night, so here we go. All right, Uber stock. This is me talking to AI, and like I always do, have detailed conversations with AI, okay? Uber stock is at $73.86 with a current PE ratio of $15 or 15.57, which is pretty low for Uber, right? I mean, I think right now PayPal, guys, is like 8 PE. That's insane. All right, so many stocks have been on decline since the pushback. Uber has faced concerns of being replaced by self-driven rides, robotaxis, automated robotaxis. The question is, and remember, this is me asking this to AI. The question is, can Uber purchase available self-driven cars and replace their drivers? So I'm basically saying, you know, Uber right now, why don't they just buy from manufacturers self-driven cars? They already have all the customer base. You have Tesla manufacturing their own robo-taxis. You have Google, which with Waymo. So why is Uber not doing that? Okay, they don't have to manufacture it to be successful. They can just buy fleets of them, right? Okay, so I'm basically asking that, and that way they can replace their drivers, which you know is just a matter of time. And so if you're an Uber driver, you know, it ain't going to happen for a long time, much longer for you. It's more profitable to own your own fleet, or I'm asking, is it more profitable to own your own fleet of self-driving cars with the expenses that having employees, you know, you have an employee that drives their own vehicle, so they don't have all those expenses, you know? I mean, I'm basically saying, is it worth it? Does that make sense for Uber to do that versus have employees own the vehicles and have all the expenses on their own vehicle, and they continue to just take a percentage of the ride, right? Okay, they give the customer to the worker, and the worker does all the work. Worker uses his car, his gas, all that stuff. Do we think Uber is a good investment? What is their cash on hand, and what is their debt? Does this investment make sense on a risk versus a reward? Okay, so AI comes back and it says this is a fantastic fundamental dilemma to break down, and it gets right to the heart of the future of transportation industry. The transition to autonomous vehicles in the ultimate test for ride hailing platforms, okay? Let's dive into the logistics, the balance sheet, and whether it makes sense as a stable investment for the stock market Jimmy community. The autonomous vehicle strategy. Okay, can Uber buy self-driven cars and replace their drivers? Technically, yes, but their strategy is not to do that. They're doing everything that they can do to avoid that. Uber actually sold off its own self-driving research division, Advanced Technologies Group, a few years ago because building and owning massive hardware fleet is it basically destroys cash. So think about that, guys. Think about that, okay? So you have Uber, who's the only company that's really in the business before Tesla, before Google. Uber is in the business of having customers where they pick them up and they take them places, okay? They are the major player in that and always have been. So here you have them saying, oh no, we do not want to own our own vehicles. That is way too expensive. And on the other side, you have Google and Tesla doing the exact opposite, okay? Because they have tons of money, okay? All right. So instead of Uber's playbook to act as a central dispatch network, they are actively partnering with basically autonomous vehicle manufacturers like Waymo and rideshare. Okay, just recently in February of 2026, so this month, Uber announced a $100 million investment to build fast charging hubs for these partner RoboTaxis. They want to control the infrastructure in the customer demand, not own the physical cars. Which model is more profitable? The current model, independent contractors, relies on high various costs, paying the driver a large percentage of the fare, but extremely low capital cost. Uber doesn't buy tires, oil, or the vehicle. Okay, owning a massive fleet of robotaxis completely flips that equation. You eliminate the driver's wage, but take on the huge responsibility of fixed capital cost, buying 80,000 vehicles, paying for commercial fleet insurance, building storage depots, funding daily maintenance. While robotaxis could theoretically operate 24/7 and eventually win out on long-term margins, the upfront capital required to buy enough cars to handle global peak hour demand would be devastating to a balance sheet. And I totally agree with that. By acting as a third-party booking agent for AI companies, Uber lets Waymo take the hardware depreciation risk while Uber just collects a toll for providing the rider. Uber's financial health. Basically, Uber right now, they have $9.8 billion in cash. They have a tremendous amount of money, but they also have $12.3 billion in short-term liabilities on debt. So they have more debt than they have cash, okay? So kind of kills the vibe on how much you got. So the cash flow, like I said, they have the 9.8 billion. About a risk versus a reward with Uber stock, is it a good investment? When you are looking for a solid play and want to avoid high-risk stocks that are prone to sudden cliff falls, you have to weigh how wide a company's economic moat is. So I'm not going to get into the bull case and the bear case here, guys, or the verdict. I'll just scroll down to my next question because I picked up on certain things that it talked about, analyzed them, and then came back with this question. When you say that Uber has partnered with Waymo and WeRide, my first thoughts are WeRide is struggling. Waymo, owned by Google, is more interesting. However, it's long-term contract agreement. However, is it a long-term contract agreement? What percentage is in play to Waymo and to Uber? I understand why Waymo would agree to a deal to receive that huge customer base. The concern, as you stated, of Waymo canceling out the deal over time, which is why I am asking about the actual terms of the agreement. The other thing you brought up is the charging stations. This is huge for Uber and requires a big investment. I am a little surprised by this because I do not understand why Waymo, Google, would want Uber owning the charging stations and not Waymo owning them. Perhaps this is a part of the overall deal between Waymo and Uber. Waymo might have agreed for a joint package deal where they get Uber's customers and Uber's investment for the charging stations. So it comes back and it says, you are spot on to this question, the leverage here. The threat of Waymo eventually cutting the cord and going solo is the exact bear case that Wall Street worries about. Let's break down the actual terms of these deals and why Uber is suddenly getting into the hardware game with charging stations, okay? So basically, guys, Uber is having to change a lot of the way that they're doing business because if they don't change, they're dead. They're going to zero if they don't change, okay? Now, it's possible they could still be going to zero. We'll get into that in a minute. But they've got a lot of problems because they're putting right now $100 million into these charging stations, okay? So their logic is, look, we're going to buy real estate and put charging stations up. Because if we don't do this, Waymo and Tesla are going to own all the charging stations. They're going to own all of the vehicles, and we're not going to be able to compete. So they started to do this immediately on buying these charging stations, okay? So they're building these charging stations out and investing in them, okay? So basically, the Uber and Waymo contract terms, the revenue split. If you're looking for an exact percentage split in their SEC filings, you won't find it. It's a tightly guarded corporate secret. However, looking at the mechanics of the deal, Uber essentially takes a platform take rate. So they basically make a fee for routing, booking, payment processing, while Waymo does the lion's share and provides the actual fare, the physical vehicle, etc. Okay. Now here I'm gonna skip down a little bit here because I've already read all this, so I kind of already understand what's going on. I'm just gonna basically explain it to you. So here's the deal. Here's how it works. Okay, the deal that Waymo did with Uber is not for everything. Okay, so Waymo, which is Google, they basically were like, look, we'll do a deal with you in this state, okay, in this particular city, and we'll do a deal with you where it's only going to be for a 2-year period of time. Okay, so it gives Google a chance to test out the relationship and the situation with Uber. And they're like, okay, Uber, build your stations, build your charging stations. We're going to give you a percentage of every single, we're going to have you basically book everything through your Uber app, and we'll use our vehicles. So Google said, fine, we'll do that. Okay. So it works out good for Google, and Uber feels comfortable, like, hey, this is great for our business. We're gonna have Google, and we'll be able to do all of the logistics. We're able to use our software and all that kind of stuff. So that's what initially happened. But it turns out that Uber and Tesla do not want to do business with Uber in the long run. They are going to completely block them out because they don't want to give up 20 to 30% of every fare. So what has happened to Uber? Uber is now in a situation where they not only have to put the money out for the charging stations, they're going to have to buy fleets of vehicles from manufacturers that make those vehicles, okay? Now they can go to those manufacturers. Let's use Volkswagen as an example. They can say, Volkswagen, look, we're building all these stations, We have to be able to compete and survive with Tesla and Google and Waymo. So we're building these charging stations, and we have the whole customer base. Okay, we have every single part of that technology. All you got to do is build these cars, and basically do a partnership with us where we're going to give you we're going to take 20 to 30% of the ride share. Okay. So here's the problem with that logic. Okay. Even if those manufacturers do that, it's not going to be big enough pie for them, because you have companies like Tesla and Waymo that are saying, no, we don't want to give Uber anything, okay? Because they know that 20 to 30% is going to really hurt their revenues, and they don't need Uber. They don't need Uber, okay? So Uber is now realizing that they're going to have no choice but to start investing in these fleets and operate these fleets, okay? Maybe in the beginning, they just partner with these manufacturer companies and bring them in, but those manufacturer companies are going to struggle. They're going to struggle. And Uber is going to eventually have to get their own fleet of vehicles to compete with Tesla and Waymo in the long run. Now, the stock right now, guys, can look like a bargain. Guys, you talk about a stock that used to be, I believe, I don't have it in front of me, but I think it used to be about $140 stock, okay? And now that stock is trading around the 70 range, 74 range, with the PE ratio of whatever I said earlier. What did I say, 14? So in reality, you feel like you just want to buy it because you're like, oh, if Uber goes back to 100, I'm going to do well. Now, here's the thing. Uber very well could go back to 100, okay? Uber's business right now is not affected at all. Not at all, okay? Their business as of today is still thriving. But the problem is, I am not interested in investing in Uber after researching them. After researching them, they have too many concerns for me as an investor. Now, you probably are saying, well, Jimmy, why the hell did you put us through all this and make a video on this topic if you're not even investing in it? Well, guys, because we're investors and I have to do research. And before I did this research, I actually thought that I was going to invest in Uber. I really thought that I was going to invest in Uber. And then when I did the research and I looked into all this, I said, why would I want to invest in Uber right now? They have to put out all of this money. They're going into a completely new part of their entire business, which is bringing in fleet vehicles, building charging stations. They didn't have to do that before. So now they have all of this expense. And to be quite honest with you, Uber cannot compete with Tesla and Google. It's just a fact. They can't, okay? Uber was relying on those two companies to do a partnership with. They do have a big, massive clientele. And Uber will probably survive. I do not think that Uber is going bankrupt or anything like that. I think that Uber will survive. And I think that they'll do it by getting partnerships with the manufacturing companies. And they don't care if the manufacturing companies are going to be successful in the long run. I think it's a short-term play that doesn't affect their business. They save billions of dollars, okay, where they don't have to put out billion or millions of dollars, that they don't have to put out all this money into these fleets right away. And they can focus on the powering stations. So they can absorb the powering stations first. Get all these powering stations, which is very expensive. You have to own the land to put that there. So you got a real estate you got to buy and then put a charging station up. So their investment will be financially rewarding, in my opinion, in the long run. Because if worse comes to worse, they can lease those stations out to the manufacturing companies, okay? So it's not like they're going to lose money on investing in that. They will make money in the long run. But those companies that they get to participate with the rides that actually own the cars, and Uber just handles the transaction, and Uber is going to make money on that, that is a win for Uber. But the question is for how long? So it's probably going to work in steps where that once they get the charging station investment over with, they'll probably lick their wounds for a while, try to focus on making some money, and then have to start buying some of these vehicles. So you're talking like 80,000 vehicles just to get started. I mean, it's just a ton of money, okay? They're just going to work out basically like leases with these manufacturing companies. That's what's going to end up happening. So we'll see what happens with Uber. But my look at Uber right now, there's just better opportunities in the market. I don't want to be a part of somebody that's going through all this restarting of investing and growth that they have to do to be able to compete. So that's my video for today, guys. Like I said, not everything that we look into is going to be an opportunity for us. So it does show you of what is involved when we make these investments, okay? All right, guys, thank you so much. I appreciate you guys so much. Thank you for helping me grow my channel. I do hope that you will join my stock chat room. I think it will be a great opportunity and asset for you in the long run. And if you're just getting started with stocks, it'll really help you learn. Whether you're an expert, it doesn't matter. Just get into the group, enjoy it. We're going to build it together slowly over time. And I appreciate you guys considering that, okay? You guys have a wonderful day and good luck.